Okay.
We're back, and we're brought to you by...
That was well done.
I thought so.
You teed me up very nicely.
I did.
The suspense is killing them.
Yeah, so don't miss the ball. Don't strike out.
Yeah.
You're teed up. Let's go.
I'm composing myself.
Okay.
It's like when I take a tee shot and I take findthebestcarprice.com, link down below in the description. Continued sponsor. Thank you very much.
Thank you, Jeff.
Aggregating lease deals, finance deals, all sorts of information. Whole concept, whole idea behind our sponsors to help you get the lowest price possible on a car deal. The way that they do that is they aggregate information from multiple dealers and help you kind of work them against one another. If you're interested in learning more, link down below. Findthebestcarprice.com.
/insider.
Insider.
Because otherwise, you'll be an outsider.
You've used that line before. We got to come up with a few more. We
Okay.
gotta, like, freshen them up.
You'll be persona non grata at your auto advocate. How about that?
All right. So, title of today's video, we're doing another update on the used car market, and the reason we are is because there's new research out from Black Book.
I've heard of them.
Yes.
Yes.
Actually, give a little background. Like, what is Black Book in the industry?
Black Book is similar to Kelley Blue Book, similar to NADA. Different parts of the country use different books. Black Book was big out west.
Yep.
They use it a lot out there. That's the book everybody prefers out there. Don't ask me why. I don't know. But Black Book is a big player in the used car wholesale value business.
Definitely.
Yes.
Yeah. And so what they do is they release, I think it's like a monthly report, and they just released their most recent one, specifically geared around the effects that we've seen from the global pandemic with COVID-19. And so what we thought we'd do is, and we'll link it down below, so you'll have access to the full report as well. But we thought we'd walk you through, and you can learn a little bit about what's going on in the wholesale and retail used car market.
So, once again, the last week of July, wholesale prices ticked up a little bit further. At a slower pace than they had been. The increases were a little smaller last week than the prior weeks, but they still went up slightly. Retail listing prices are showing a much slower increase. So dealers have gotten to the point where they know they're paying way too much for the inventory, and they know they can't jack up the retail prices any further than they already have, because A, people can't afford to buy them, and B, banks won't finance the amount of money that's needed to get the loan in place for the customer.
And so last week we did a video talking about how used car prices have finally peaked, and I actually felt validated today, Dad, because the day that we're recording this, Carvana reported their second quarter earnings. And they said on their conference call, we're expecting to not have enough inventory to meet demand because we simply can't even justify paying the prices for vehicles at auction. And I thought that was super interesting, that Carvana, probably the most spend-happy, they've never made a profit in any quarter.
Yes. So why start now?
Yeah, why start now? They're the most spend-happy company. Their CEO was on this investor call, the quarterly call, saying prices are too high. And so I think we were actually, like, patting on the back a little bit, we were actually kind of right. Last week it really does seem, and I guess it trailed into to this week just a touch. Prices have really hit what we think should be the summit, should be the peak.
Yes, absolutely.
On their way back down. It's just, they're not sustainable at these levels.
No, they are not. And it's funny that you mentioned what you just mentioned, because specifically CarMax and Carvana are the reasons that the wholesale prices are as high as they are.
Definitely.
Because they have deeper pockets than anybody else, and they're outbidding everybody else. So the smaller dealers, the smaller independent used car dealers, they're not in a position to be able to compete with them. So CarMax and Carvana are artificially inflating the wholesale value of used cars.
I don't think it's artificial, Dad.
It is, because they're freezing everybody else out.
But that doesn't necessarily mean it's artificial. Like, artificial would mean fake. Like, they're both, think about how deep their pockets are. So they're willing, I think, but they've reached their... They've reached
the limits as to what they think they can do, but they've still been willing to outbid everybody else. And they realize that their profit margin per used car is going to shrink, but they're okay with that because they're back-end profits, their finance and insurance profits, they figure can more than make up for the lost revenue in front-end income. And they'll have, even though they'll have shortages of cars, they will have more cars than everybody else that they've frozen out of the market because of their spend-happy ways.
If you're looking for used car supply, Carvana and CarMax are going to have the biggest.
They're going to have the biggest, and they're still going to be limited.
Oh, and that's the kind of crazy thing about what's going on right now.
Yes.
And one other comment on Carvana, just to put this into perspective, and I don't think I've shared this with you, Dad.
Okay.
But their market capitalization, so the value of the company, today is at $36 billion.
Okay.
So on its own, it's like, okay, I don't really know how to what does that mean? It's kind of abstract. They sold 200,000 cars last year. Not even. Close to 200,000 cars.
Yeah.
CarMax, which sold over 800,000 cars last year, their market capitalization is $15 billion.
Now, but help me with one thing. Did CarMax make money last year?
Yes.
Okay. Did Carvana make money last year? Did they make money last quarter?
No, they haven't.
Have they ever made money?
But the reason I bring it up is because there's a lot of, whether they're making money or losing money, there's a lot of money invested in this space, and even they're saying, we're going to run out of cars. We're not willing. That $36 billion valuation, it'll go in the opposite direction if we keep buying cars at these prices. What other white flag do you need to see wave to say that prices are going to go back down?
Yeah, but help me with one thing. How can a company that sells a quarter of the cars that CarMax does, that's never made a profit, how can they be worth more than double market capitalization-wise than CarMax? How can that?
Put that answer in the comments below.
Somebody help me with this. I don't understand.
You're just a car guy.
I'm just a car guy, and this math to this car guy just doesn't add up. I'm sorry. Yeah. What else did you want to know?
All right,
because I have more information here.
You highlighted all sorts of stuff.
Well, I did. I did. So, news from the retail world, both for new and used cars. New car deliveries to the dealers are finally beginning to increase, which means the manufacturers are finally getting around to be able to produce cars in the numbers.
Getting around, you're implying like that.
Well, I'm just implying that they haven't been in a position to be able to produce at the levels that they would have liked, and they're finally getting to that point.
They got off their lunch break, and now they're working again.
They got off their COVID break.
There we go.
And they're building cars at a steadier and more rapid pace than they had been in the past. And those cars are finding their way to new car dealers. Unfortunately, new car inventories haven't really been able to increase so much because so many of these cars that have been finding their ways to the dealership are pre-sold.
Sure.
Because the dealers knew they were coming in, and they've taken deposits on them, and they're sold cars. But the inventory for new cars is slowly building up.
And if you need a used car and you're in the market for a used car, this new car supply is a big major driver of that because you want new car supply to be back to where it was before because that'll help drive down used
car prices.
Yeah, used car prices.
Then the used car inventory levels still remain low, and they're still hovering around a 30-day supply, which is typically they like the supply to be somewhere between 45 and 60 days
for used cars.
So they're really operating at pretty close to 50% of used car inventory. For most dealers, except for maybe perhaps CarMax and Carvana, who are freezing everybody else out.
Well,
now,
but do you mind speaking to just briefly? I mean, when we talk about days supply,
yes,
like when you were managing dealerships, you would actively be checking what your day supply is because that directly correlates to how likely you are to negotiate on a deal.
Yes, and it's called inventory management.
Yep.
You need to know your day supply, and you need to know which cars have been sitting and which cars are moving, and you need to adjust your pricing accordingly.
Yep.
Okay. Now, some people might say, and our good friends at Black Book did.
Okay.
What comes next? Okay, well, what comes next is that there should be incremental influxes in both new and used cars. Okay, you're going to see the influx in used cars due to the delays in lease returns that there have been finally coming back to the dealerships. There's going to be the continuing downsizing of the rental car fleets from Enterprise and Hertz and Alamo and all those others. And lenders expect that because of the increase in delinquencies that we'll be seeing an increase in repossessions. And all that added up means that there will be more used car inventory becoming available, which should, as they see it, they forecast a significant drop in wholesale prices this fall relative to the heights seen in recent weeks.
And I think that last part, relative to the heights seen in recent weeks, is really important because, and I'll put the chart up on the screen. I mean, there's all sorts of different charts, but it's like, they show how pre-COVID, okay, we're here, COVID down here, 3 months into COVID, we're way up here, and now we're on our way back to here.
Yes.
And so the volatility, the swings, and the velocity of those swings have been
incredible.
Yeah, truly something that I don't think you've ever
seen anything
before.
like it.
So as we do see prices kind of normalize, don't be surprised if it happens kind of quickly when it does happen.
Yes.
We've stated we think it'll be in the fourth quarter because, quite frankly, that's when new car manufacturing should really be back in full swing.
Late fall and into winter.
Yep.
Yeah.
So you'll see a pretty drastic change in pricing is our anticipation. And Car Gurus has a price trends. It's kind of a hidden feature on their website. If you go to Car Gurus, it's down in the footer and it says price trends. They do track across all of their different vehicles, make, model, trim.
What's a footer? Is that the bottom?
It's the bottom of the website.
Okay, cool.
Check out their price trends. The reason I bring that up is it also shows this swing in velocity being really pretty rapid in terms of price movement up and down.
And I think finally, after 6 months of doing this, that we're probably pretty close to being accurate as to what our prediction is as to when we should see used car prices coming down.
Which I'm kind of upset about because we need this to kind of drag on so we have content to keep coming back to.
But we'll find other shit to talk about.
Yeah, we probably will.
Yeah, we will. I promise you. So if you're interested in a used car, I think you have to wait just a little bit longer. Now, there are some who comment all the time, why have people wait? Okay, prices are going to continue to go up. They're not going to go up forever. They're going to start to come back down.
Today's Carvana news is pretty big. I mean, if we just made a video talking about the fact, I mean, they're from a market capitalization standpoint, one of the largest retailers, which is nuts. And they're literally coming out and saying there's going to be a shortage because we can't afford to buy cars at current prices. So if you think prices are going to keep going up, that's the biggest signal that you're wrong.
Yeah.
They're going to go down. And it's just a matter of how much.
Even the big players can't afford to keep buying at the prices they're buying at.
Which is because consumers are wise enough to say, why am I spending 15% over what this car is actually worth when my bank won't even loan me the money to do it?
I was just talking to our dear friend Glenn in Arizona, and Glenn's in a lease car now, and
like he's in a lease car.
Yeah, well, he always leases his cars, and his lease is coming up in I think another 5 or 6 months, and his residual is like $28,000. And he looked at Manheim Market Report, and the cars are selling at Manheim for $32,500. And he looked at what his payoff is, which is only $30,000, and he thought to himself, hey, there might not be a better time to ever try and trade in a lease car before a lease is over than right now, because the value of his car has gone from what was a couple months ago around $28,000 up to $32,500. It's going to start coming back sooner than people had envisioned, from what we see.
And we might be wrong.
It's always a strong likelihood.
Thanks, Dad.
Thank you, Zach.